Japan and the United States have jointly intervened in currency markets to support the yen after it fell to its weakest level in 40 years. The rare move sent the Japanese currency sharply higher and pushed down the US dollar. The intervention was confirmed by Japan's finance minister after President Donald Trump said Washington was helping Tokyo as a sign of friendship and to support the global economy.
Currency.
Because we have a good relationship with Japan. We're very strong, very, very strong financially. They have a weakening yen, and they wanted a little bit of help, and we're always there for Japan. Japan's been very good to us, with the exception, of course, of Pearl Harbor.
Mr. President, what is the U.S. getting out of that arrangement?
Financial benefit. Financial benefit. It's also good for the world economy. But we make, when we did with Argentina, I got criticized, we made $25 billion on that deal. On Venezuela, we make hundreds of billions of dollars. I make good deals. Intel, I made $75 billion for the country. I didn't make for me, I made for the country. Intel, I backed Intel. It's the hottest stock right now on the New York stock, on the various stock exchanges. So we made about $75 to $80 billion. And Japan wanted to, it was really more than anything else, it was a signal of friendship.
You've said that
because
the
yen is
anti-weapon.
weakening, and the dollar is doing great.
You said
The fact is, our country is doing great. Everybody wants help from our country. Yeah.
In simple terms, both governments sold dollars and bought yen to increase demand for the Japanese currency and stop its decline. The yen gained as much as 1.4% after the announcement, reaching 155.2 against the dollar, its strongest level in nearly 3 months. That followed a gain of almost 4% over the previous 2 trading sessions. The yen also strengthened against the euro and the British pound, while the broader sell-off in the dollar pushed both currencies higher. But the sudden rise in the yen weighed on Japanese stocks. The Nikkei index fell, reversing gains that had taken it to a 1-week high in the previous session. Japan's finance ministry said Friday's intervention carried out with the US Treasury was intended to counter excessive volatility and disorderly movements in the currency market.
米国の東部時間7月31日金曜日、我々日本国財務省は米国財務省と協調して円買い介入を実施しました。今回の協調介入は2025年9月に発出しました日米財務大臣共同声明に基づき実施したものでございまして、最近見られた円の過度な変動や無秩序な動きに対処したものです。日本国財務省は状況を注視し、米国財務省との緊密なコミュニケーションを維持しています。我々は今後もさらなる協調介入を実施することも躊躇しません。これ以上の介入の実施や状況については特に申し上げることはございません。
オペレーションはまだ続いている可能性がある
私たち、財務省当局として、米国当局としてまさに、無秩序な動きに対しては断固たる措置を取ると、それは実行されると、そしてそれはいつでもその状態であるということを、申し上げているということです。
Both governments have warned that they are prepared to act again. US Treasury Secretary Scott Bessent said Washington strongly supported Japan's efforts to correct what he described as the yen's substantial undervaluation. He also repeated his call for the Bank of Japan to raise interest rates further. Japan has been struggling to stop the yen's prolonged decline. A weaker currency makes Japanese exports cheaper abroad, but it also raises the cost of imported fuel, food, and other goods. This has added to inflation, reduced household purchasing power, and increased political pressure on Prime Minister Sanae Takaichi. The Bank of Japan raised its main interest rate to 1% in June, its highest level in 31 years. But that increase, along with earlier interventions in April and May, failed to produce a lasting recovery in the currency. On Friday, the central bank kept rates unchanged but gave its clearest indication yet that another increase could come soon. Bank of Japan data suggests Tokyo may have sold almost $59 billion to buy yen during an earlier intervention in New York on Thursday. The confirmed joint operation with Washington followed on Friday. This was the first coordinated US-Japan currency intervention since 2011, when major economies acted to weaken the yen after the devastating earthquake in eastern Japan. This time, the objective is the opposite: to strengthen the currency and contain the wider financial risks created by its decline. Analysts say the intervention also reflects concern that a continuing sell-off in the yen and Japanese government bonds could spill into global markets and push US borrowing costs higher. South Korea also intervened on Thursday to support the won, suggesting wider anxiety about pressure on Asian currencies. The immediate intervention has worked. with the yen recovering sharply. But earlier attempts produced only temporary gains. The longer-term test will be whether coordinated action and possible interest rate increases can stabilize the currency without causing deeper losses in Japan's stock and bond markets.